B-A-T-C-H-I-N-P-I-P-S. I've been B-A-T-C-H-I-N-P-I-P-S. I've been.
All right, I'm gonna jump right into it. This is my John Wick strategy. This strategy, John Wick, got its name. Basically, at this point, it's the only strategy of mine that requires the confirmation to pass both the bodies and the wicks of the formation. And you'll see what I mean here in just a second. The first example, I'm gonna be extra detailed. I'm gonna take it slow. Then after that, I'm gonna give probably like 6, 7, or 8, like just additional examples, and I'll just run through those pretty quick. But on this first example, we're looking at USD JPY. We're looking right here in this area. So the first thing to note about John Wick, and the very first rule is it's a New York session trade only. I'm not going to repeat that rule per se, not too much. Just keep that in mind. This is a New York session trade only. But first, I kind of want to give you the overall what you're looking for. John Wick essentially is just the market likes to move in 3 intraday pushes a lot of time, meaning you have push number 1, consolidation, push number 2, consolidation, push number 3. What we're doing with John Wick is we are catching the top of, or the beginning of push number 3 and riding that out for the rest of the day. That's the John Wick strategy in a nutshell. Trade the third push. So how do we identify that third push is about to happen? So let's go down these rules and we'll break that down. So the very first thing that you really want to look at is the Asian session is going to give you your first clue that John Wick might happen. So the Asian session, what you want to look for is at some point you want to see a straight shot, a straight push. So when I say straight shot, what I'm talking about is like you got all these red candles right here, and then it goes into consolidation. There are no green candles within, or bullish candles, depending on, whatever your color scheme is on your chart. So I'll just say there are no bullish candles anywhere within this push down. That's good. That's what I want to see. So that straight shot in Asian session lets me know. That's my first clue. Like, I wonder if this might make John Wick. The second push will always be in the London session. Oh, so let me just put it that way too. Your first push will always be in the Asian session. Second push always is in the London session. Third push, New York session. So after that first push being a straight shot, you get that consolidation. The next thing you need to see, and this is very important, you need 2 consecutive candles to break through the entirety of the Asian session move. So you need to put a line in this situation at the lowest point in your Asian session move, which is going to be right here, or the lowest point of that push down. So there's the wick, the lowest part of that wick. Then you get 1 red candle. It breaks through all of that. The first candle does not need to be the one that breaks all of it. That's just how it happened here. But between that move in general, you need 2 consecutive candles to break through that. So you get the first one right here, followed by 1 more here. If that sounds familiar, that's because I used to have a strategy that I called Dos Equis. I no longer traded that because I kept losing on it. But actually, when I thought about it, I was like, you know what? John Wick is basically my Dos Equis strategy revised. Like, this is just the updated, revised version of Dos Equis, where now I realize why I was taking L's on Dos Equis. I've made those tweaks. It's just called something different now. It's John Wick. But even with Dos Equis, that was what that was for. It was a reminder. 2 X's on a beer bottle was my way of reminding me that I needed 2 consecutive candles in a row on my confirmation. So far, we got a straight shot during Asian session consolidation. Then we get our second push during the London session with 2 consecutive candles going in the right direction that we want to trade in. Now, the London session push does not have to be only 2 candles. It can be 4 or 5 candles. That's fine. It's just on that confirmation, you need at least 2 consecutive candles. Now, after this, if we would have had a green candle followed by 1 more red candle and then a consolidation or a retrace, that's still fine. We still got our 2 consecutive candles. That's the main thing I'm looking for. But here we have 2 consecutive candles, and then it went right on into a consolidation / retrace. And then at this point, we're almost ready to take our entry. The only thing we got to do is check one more thing, and that is to make sure that we are going to be trading in the direction of what side of the 144 EMA we're on at the end of the second push. So when this second push ended, it was under the 144 EMA. That's important, and that's what we need because we're planning to sell this. The reason we're planning to sell it is because we have what? A down push Asian session, a second down push. So once again, we're trading the trend. So we're trying to catch the top of that third down push. If the London session push did not end below the 144 EMA, this would be an invalid John Wick trade. So, and then actually I take that back. There's one more thing you want to look for, which now we'll go to the 15-minute time frame and I'll show you that. You just want to make sure that the 15-minute time frame is not coming out of the band. So when I take my entry here, all I'm looking for is for it to come back up and grab the 50 EMA. Since I'm selling it, ideally I want to get in above the 50 EMA. That's my gold line right here. Now, before it retraces to my gold line, I want to make sure it's not coming out of this band, out of these bands right here. These two dotted lines, those are my bands, my oversold bands or overbought bands, depending on if it's the top bands or the lower bands. So if it retraced from here, I'm not taking that. I don't want it coming up out of my bands. It didn't do that here, so we're good. So all you need to do at this point is wait on it to grab that. You enter the trade somewhere up in this area. And then you could have caught upwards of, let's see, about 100 pips on this trade. So that's the first example. That's me taking it slow, being as detailed as I can. And that's all the rules. So once again, I'm not even going to say it on this one. Let's just go to a different example. And I'm just going to speed through some stuff. All right. So on this example on the Euro USD, we're looking right up in here. So your first push, during the Asian session, you have a straight shot. There are no bearish candles in that anywhere. So the first push looks good. Let's draw a line at the top of that. So now the second push needs to happen during the London session, and we need 2 consecutive candles to pass through the entirety of this, the bodies and the wicks. Here's our first green candle. Here's our second green candle. By the time that second green candle closed, we were on top of everything. Cool. Second push looks good. So first push in Asian, straight shot. Second push in London, 2 consecutive candles. We're good. The second push also closed above the 144 EMA. So the fact that we want to take this buy, also, we're good. All we got to do at this point is go to the 15-minute time frame. And when we need to make sure price did not come out of the bands up here. So since we're selling now, we want to make sure price didn't come from inside these bands. And when I say inside the bands, I mean the candle bodies. Now, if it wicks inside the bands, I do not care. But if a candle body closed, more specifically like a full candle is inside the bands, that's when I'm like, but we don't have to worry about that here because it ain't go close to the bands. It came down, it grabbed the 50 EMA. Since I'm buying, I want to enter below the 50 EMA, below the gold line. So you get in somewhere in this area, you could have caught about 60 pips on that trade that same day. Let's look at another one. All right, here's an example on the GBP USD. Very similar as the one we just got done looking at. You have a straight shot during the Asian session. Put a line at the top of that. Your London session push for push number 2, you have 2 candles in a row in the same direction, and it closes above the bodies and the wicks. The second push closes above the 144 EMA, so we're good to buy it. All we have to do at this point is go to the 15-minute time frame. Wait on price to come down. Now, it looks like it's in the bands, coming out the bands. That's actually the lower bands, though. So that's not actually coming out of like the upper bands. This is just, it's retraced weird because this particular example is kind of far back in the past. But it comes down, it grabs our 50 EMA, and we want to get in below the 50 EMA because we're buying. You could have had a little bit of drawdown on this one, not too much. But you could have ended up catching about 90 pips. Then actually a couple of days later, we had another one right over here. Here's another example. And this one is a little bit more tricky, but all the rules are there. So The Asian session looks a little bit more, the straight shot or the move down, that push down is, I guess, maybe a tad bit harder to identify just because you had a little bit of a push up first rather than just a sideways movement. This is more of a push up. Then it gave me a straight shot down. But I have 3 consecutive candles straight shot to the downside before it went into the London session. So this push number 1 is still good. I'm going to put a line at the bottom of that right there because that's the lowest point in my push to the downside. That second push in London, we have 1 red candle, 2 red candles in a row. So there's our 2 consecutive candles, and those did close completely below the bodies and the wicks of the Asian push. So push number 1 is good. Push number 2 is good. Push number 2 ended below the 144 EMA, so our sell is good. And then we just go to the 15-minute time frame. We were on May 11th. We go to the 15-minute time frame. We make sure that price is not retracing out of these lower bands. It's not. Cool. We just wait on it to come up and grab the 50 EMA. We're selling this, so we want to get in above the 50 EMA. So this gave you ample opportunity here, 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 and here. You had 4 opportunities, 5 really, if you count this little bitty wick above the 50 EMA. But let's just say, and we got in around right here. That means that same day you've caught over 100 pips. All right, here's an example on the GBP CHF. We're looking in this area here. Now on this one, it's a little bit more tricky because you have on our first push in the Asian session, that push extends into London. That's okay because that push clearly started in the Asian session. This candle right here, the reason I know that that's a bearish candle is because even though it's so small, it's hard to see. If I just hover my mouse over this candle, I see the closing price is 1.09089. And then if I hover my candle on this one, it's 1.09088. So this one ends in 089. This one ended 1 micro pip below 088. That's why I know that that's still a valid bearish candle. So this is a straight shot down before it retraced up before push number 2. So we have a valid straight shot down on push number 1. It comes up, then it gives me push number 2. Let me put a line at the bottom of my push number 1 though. So this right here, this wick, the bottom of this wick is the lowest point in my push number 1 before that retrace happened. Then I have 1 red candle, 2 red candles, 2 consecutive red candles in a row, and the second one closed completely below the bodies and the wicks of push number 1. Also, it closed below the 144 EMA, so my sell is good. All I do is go to the 15-minute time frame, wait on price to come up and grab my 50 EMA. Clearly, it's not coming out the bands, so we're good. It comes up, it grabs the 50 EMA. It gives you plenty of opportunities to get in above that 50 EMA, and you could have caught about 70-something pips that same day. If you would have held it into the London session, then you're a little bit over 100 pips before it starts to retrace up. All right, here's an example on gold, looking in this area here. So you have so once again, this one's a little tricky, but you have a straight shot up, but it's followed right by a straight shot down. So I'm focusing, of course, on the straight shot down because on my second push, we end below the 144 EMA. So I'm focused on this straight shot to the downside. We're good. Let me put a line at the lowest point of that straight shot down. Then we get a bull candle, which separates my straight shot down from my Asian session push. From my London session push. So my London session push goes 1, 2 candles in a row, and it closes below everything that the Asian session did. So good. My first push is fine. My second push is fine. It ends below the 144 EMA. So I'm good for that sell. All I do is go to the 15-minute time frame. Oops, I moved my line on accident. But anyway, we were in here somewhere. It's not coming out the bands before the retrace to the gold line. So it retraces up to my 50 EMA, and we want to get in above the 50 EMA. So it only gave me 1 opportunity here, but out of that 1 opportunity, I could have caught 100 pips out of that trade. Okay, and this is the last example that I'll show of a valid one before I show you a couple of invalid setups. So what we're looking at is GBP JPY. We're looking right here in this area. The reason I want to show this example is because the move actually happened on the fourth push in this situation. Normally it's going to happen on the third push, but I want to show you that the fourth push is also still valid. But anyway, let's go over this trade real quick. So you have a straight push down in the Asian session. These 3 red candles, that's my straight push down before it consolidates, before giving me the second push in the London session. Let me put a line at the bottom of my Asian session push. Then I have 1, 2 candles in a row that close below the totality of that whole Asian session situation. Once again, it does not matter if the first candle closes below the whole thing or if it waits and does it on the second candle. It doesn't matter. As long as by that second candle is closed below everything, we're fine. Then it gives me consolidation again. And also I'm closed. That second push closed below the 144 EMA. So that still makes my sell valid. I only want to trade in the direction I'm on at the end of that second push, and it's below the 144. So I'm good to sell it. But then we get a third push down before an additional retrace. That's okay in this situation because the trade is still going to be valid because the entry still happens within my trading hours in the New York session, even though it's on a fourth push. So let me go to the 15-minute time frame. And on this one, here was where price came up and it grabbed the 50 EMA. We get in the trade, and then you catch pretty much almost 100 pips if you just hanging on, but which of course you hang on till London session, you can get that 100 pip trade, but basically you're sitting at around 90 pips profit that same day at the lowest point. All right, so now that you've seen some examples of valid setups, I want to show you just a couple of examples that are invalid so that you would still know to avoid these. So what we're looking at is right here on the USD CAD. Here's a straight shot down during the Asian session. Then I'm going to put a line here. And then we have, this is where my pass candle starts, or my confirmation. My confirmation does not start on the second push until I pass, I'll say until at least I pass the body. So even though we have this right here, this red candle followed by this one, this is not where I start my 2 consecutive count. My 2 consecutive count does not start until I'm going to at least pass the bodies, but then I also need to pass the wicks though. So what happens here is, even though we get this candle that passes the bodies and the wicks, I don't have one after that. So that's one problem, is I don't have my 2 consecutive candles that I'm looking for in the way that I'm looking for them. The other issue is we have, if I go to the 15-minute time frame, I was on the 20th. You see right here, this red candle is inside, completely inside the bands. And remember, we have that rule, M15 cannot be coming out of the bands before it retraces to our entry point. So that's exactly what happened. It retraced to the entry. Had we sold it right here, like that would have been a real bad L. Well, I wouldn't have took that whole L. I'd have been out way before that went all the way up there. But the point is, it would have been a loss. So, and that's 2 reasons why. It did not give me my 2 consecutive candles, and it did not give me, the price was coming out of the bands. Let's look at one more invalid example, and then I'll close the video out. All right, here's one on the Euro CAD on August 25th. Exact same reasonings as the one I just showed you on the other one. We had a straight shot here, cool. And even though we had 3 red candles in a row, it isn't until this one that the first one counts. Why? Because I at least want the first, for me to say it's a confirmation candle, it has to break structure. The confirmation has to break structure. This is the first candle that broke structure. So I needed this candle to at least break the bodies, but then I needed one more after that to make it, 2 consecutive candles on the confirmation. Didn't have that. That's reason number 1. Then also, if I go to the 15-minute time frame, we were coming out of the bands before that retrace. So when it retraced up, It was coming out the bends. That's another reason why it just kept on going up. We want to avoid that trade. I would have never took that. So with that said, I'm just going to go ahead and close the video out. I think we have enough valid and invalid examples shown for you to be able to come back to this video and use it as a good study guide. But yeah, that's the John Wick strategy. I will say that within the last couple of months since I came up with this strategy, it's been the one that has shown up the most by far. And now that I'm thinking about it, because I almost forgot, there was a John Wick trade today on the GBP CAD. I actually missed this trade because like I saw it coming. I posted it in the group and everything, which I can show you. Let's see, where was my trade ideas right here. I was planning to do a half risk buy on the GBP CAD based on John Wick. The setup was a little bit ugly. That's why I was going to use half risk on this particular one. But basically what I saw was I had a straight shot right here, straight shot to the upside, consolidation. Then I had, I put my line at the top here. I had 2 candles in my London session push. It closed above everything. This is what threw me off is after that push, I had a bearish candle on H1 come down and close below this previous low. That threw me off. And I was like, hold on, that's kind of ugly on. It usually doesn't do that. But the rules were still met. So when I went to the 15-minute time frame, price had already come down and grabbed the 50 EMA once, but that happened outside of my trading hours. So I didn't worry about that. What I told them was that price was going to come. I said that I wanted price to come around this area right here. I think that's where I put it. Yeah. So I drew that box right there saying if price comes right there within that box, I'm taking the buy. And then my stop loss was very close. I think my stop loss was like 10 pips or something. And it came within just a couple, like 2 or 3 pips of my entry area, and it just didn't go quite that far. And so I missed it waiting on it to come down to this box. I mean, that happens sometimes. It's part of the game. But the point is the strategy still worked today. It came back down and grabbed the 50 EMA during my trading hours. And as of right now, if you were still holding the trade, you would be up 65 pips. So, and some people did catch that trade. As a matter of fact, I think 1 or 2 people passed the challenge today. Let me see. Let's see. Yeah, this person, 3% gain on the account. That's what's up. Here it is. Yeah, this person passed phase 1 on a 200K account on FTMO. Like, yeah, that was dope to see. I love seeing that. But anyway, that's the John Wick strategy. Study up, and yeah, holler at y'all on the next one.